Hi everybody, Alex Employer from Expert Forex, and in today's video you are going to see the Simple RSI Trader take $1,000 to over $500,000 in only 57 minutes. And the 57 minutes actually relates to the length of the video, not how long it took to create that fantastic return. Now, it all started with this particular video, which was made 2 weeks ago and had 72,000 views. And I explained the RSI oversold and overbought technique in this particular video. And as you can see, lots of people are quite excited about the technique. In this video, I've also mentioned that we're going to be automating the technique, and what you're seeing right now is part of that automation. We have done that. The launch will be in the next few days. Now, in this video on your screen, which was made, in fact, I think yesterday, I show you how we use the RSI Trader Generation 1 to find settings that produce 100% success. Fantastic. This EA is quite unique. Now today we're going to show you something else, which is taking $1,000 to $500,000 in a year. Now this is a webinar type of a video because I'm going to be showing you hands-on what is happening, and you can watch the entire trading of the EA as it goes through the process of turning $1,000 into $500,000. So you may not have seen the video I've just shown you, so I'm going to repeat some aspects of that video. So the first thing that happens is your robot comes to you and it says, I'm your new trading robot. I'm called the Simple RSI Trader Generation 2, and it's saying, what would you like me to do? We have to instruct the EA what to do. EA is the same as a robot. So you need to understand, and a lot of people that go into robot trading think the robot is the controlling side of trading. No, the robot is your servant. You are its boss. You own the robot. The robot will only do what you tell it to do. And if you don't know what to tell it to do, you will fail as a trader as well as a boss. Imagine employing somebody and asking the employee, oh, you need to tell me what you want me to do. So the first step is to get to know your robot. Find out what the robot likes to do, how they do it, and what turns them on, what makes them generate huge amounts of profit. So firstly, this robot is called the Simple RSI Trader because we have simplified it right down to only having 5 settings. And here you can see the 5 settings on your screen. I'll go into them in a little bit more detail later on. But the current tradable RSI has 2 pages of settings. So that is why the Simple RSI Trader is so powerful. We've extracted the settings that really drive profitability. Okay, now the important part, how does this robot work? And it's based on the free RSI indicator, which you can find on all platforms. All trading platforms should have the RSI indicator. And the key settings for the indicator is the look back period of the RSI. Now if you look here, this particular one has a look back period of 2. So in other words, it's actually looking back at 2 readings back and taking an average. That's how what that means. If it was 6, it would look back 6 and take the average reading over the last 6 readings. That's how the period setting works. And then it asks, it works off overbought and oversold levels. Now overbought, and there at the top, that particular line represents the overbought line, which means that that's the stage at which the RSI starts saying the momentum is too high. It will start coming back, which in most cases it does. It never really sticks up there. But if it does stick up there, there's a solution to that. But so, and the same thing with the oversold. The RSI is telling you, oh, the Momentum is excessive in the sell direction, and it is very likely to reverse. That's basically how the overbought and the oversold levels. Now you can set them at various levels, and out of interest, the higher you set them, the better the quality of your trades, because you're going to only trade the most exceptional trades. So now, how do the entries work? Firstly, the entries work by the indicator coming over the oversold, in this particular case, over the oversold, and then reversing and then going back over that oversold line. And only then do you enter a trade. You don't enter it on the way down, you enter it on the way out. And the same thing here, it goes overbought, turns around, and then goes, and that is your sell signal. So this would be a buy signal, that would be a sell signal, this would be a buy. It goes oversold and then turns into it turns around and goes over the oversold level, and that is when you buy, and so on. And there again, it goes overbought, turns around, goes over the overbought line, and that is your sell signal. And here's a buy signal building up. So that's how simple the RSI Trader is. Very simple. That signal that you see there is very simple, but extremely, and I must stress, extremely powerful. And then the next thing is entries are made on the close of the candle. So what happens when you're actually trading is that this line over here would go over and under and over, and it'll be moving around, it'll go sideways and all kinds of things. So what we do is we wait for the candle to close and a new candle to open. So then we know for sure that that reading that we're taking over there is a solid reading. We don't trade on the forming candle, we trade on the closing candle. And then how do we exit from all of this? Well, we have to tell the robot what kind of target to use and what size stop to use. Very simple. How simple is that? That's all that is involved in this robot from a trading perspective. So now that we've got to know the robot a little bit better, let's look at what else we need to tell the robot. Okay, so the instructions that we need to tell the robot is what account size are you going to use for the trading. Now that is needed for the robot to calculate the position sizing or lot sizing that you're going to be using for Gen 2, and I'll explain that. Currency cross, which currency cross are you going to trade? Which time frame are you going to use? Which RSI period, we've discussed the period, which overbought and oversold levels are you going to use, which targets are you going to use, and which stops are you going to use. So those are the things. So you've got to tell it quite a bit, but as you see, we've simplified this completely, and we give considerable guidance in the settings area. But one thing that you have to bear in mind, that every currency and every time frame requires different settings to perform optimally. And these settings can change if the market changes from, let's say, a sideways market to a trending market. You would change your settings. The RSI is basically a sideways indicator and likes to trade in sideways markets. Now, if it starts trending, it will start giving false signals, and that is why you need to change your settings. And the second point is a repeat, which is you need to change your strategy when a trend starts happening. So your settings, for instance, will go super conservative. The overbought levels will go to 99 and the oversolds 1 to 1, so that only the exceptional entries are entered into. That's just an example of a strategy. Okay, so what you're going to be seeing from now on, and from now on is when the action starts happening, you're going to actually see some trading, and we're now over the theory part of it, but we're going to start with $1,000 initial deposit. We're going to see this the trading run up an amount of 570,000. So it's over $500,000 will be run up over this period, and the profit factor is 1.3. That's only how much the profit is higher than the loss. And then the absolute drawdown pretty low, And the number of trades that this robot will take is 339. A lot of trades, but remember, we are trading firstly the 15-minute time frame, so that's why there are so many trades. And we're trading over a year. We're trading from the 1st of May to 2024 to the 1st of May this year. Okay, so now what settings are we going to use? Now, it's actually very simple. We're going to use the RSI 3 setting, which is quite a volatile setting. And so what I mean by that is if you, for instance, have a 6 setting, it is less volatile and less likely to reach those overbought and oversold levels. The smaller the setting, the more likely it is to hit overbought and oversold levels. So that's, remember I said when the trend happens, we'll most probably change the RSI to something like 14. So that it's very unlikely to hit those overbought and oversold levels. So I'm giving you tips on how you manage this indicator, this EA. You use very fast settings there in a normal sideways market, but in a trending market, you make it impossible for the RSI to reach overbought. So you use big settings. The bottom level, so we're talking about the RSI that came down and then started going up. Now that's a buy signal. And what is the oversold level? And the oversold level is 5. Now, a lot of you use most probably 20 or 25. This one uses 5. It's more conservative, gets fewer entries, and that's another way you can control risk. If you go into a trending market, you make that 1 or 2 so that the indicator is less likely to reach those levels at all and enter a trade. So but if you in a nice sideways market, you can relax that, and 5 is a good, 5 to 10 is a good setting for that area. Then, and here's the difference in the generation 2 version. We have a percentage of equity that will apply to lot positioning. So you could say, I want to risk 5% on every trade, and it will then automatically work out what kind of position sizing will be applied to that. And that's the main difference between generation 2 and generation 1. Generation 1 uses this fixed lot system. In fact, we are going to be taking it out. You'll see I don't regard that as a setting we're going to be taking out in the final version. Then you tell it whether what kind of stop losses, what size stop losses, and what size profits you want. And these are in pips. So in this case, we're saying we want very tight stops, 30, but bear in mind this is a 15-minute time frame, so 30 is actually quite a big stop for a 15-minute time frame. And then we want to take profit of 80 pips, so we want a big movement to generate the profit. So those are the settings that we are going to use to generate this fantastic result. So let's move right over to the actual trading side of things. Okay, so through the marvel of great technology, I have dialed into another computer that is located elsewhere in the building. It's my test computer, and here we are. And what I'm going to do, the first thing I'll do is go and activate the strategy tester. So there is the strategy tester. It has already been loaded with the Gen 2, and this is the development version. It's almost the same as what you will see. The only thing we're going to take out is that setting that we don't need, which is the fixed lot setting. And we've got the euro yen as explained earlier. That's the one we're going to be using. We're going to use open prices, and because the decision making by the robot is made on the close of the candle, so that we know that that setting is 100% firm. So that is fine to test on that basis, and we're going to be using the 1st of May to the 1st of May this year. We're going to use a spread of 1, which is pretty good for the euro yen. That's one of the advantages of the euro yen. It is a volatile currency with a low spread. And we're going to be using the 15-minute as shown. Then let's have a look at the and we're using tick data, which I do explain in the previous video. I will give a link to that in the description of the video as well as in the commentary of the video. And then we're going to the settings side, and here are the settings that we're going to be using: 3, 5, 3 for the RSI period. The bottom level, that's what we call the oversold level, where the price is to go beyond it and then come up again and create a buy signal. That level will be at 5. Now there is no top level, because what we do is we use the mirror image. So if you enter 5 there, the setting for the other side will be 95. If you enter 10, the setting for the other side will be 90. So that's why you're only entering one side. Then we say, what kind of risk do you want to take to on each transaction? And that will be your starting point, but it will also increase as the transactions happen. So if you make a loss, your balance will go down, and 15% of the balance will, of the equity will become a smaller amount, which in which case you'll be using smaller position sizing, or if it goes up, you'll be using bigger position sizing. So that's really the trick behind generating the $500,000, is using that ability to increase your lot sizing as you succeed. So we're going to be using 15% there. That one is coming out. Then we're going to use a loss of 30 pips, quite tight, but it is a 15-minute time frame. Let's see how that works out. And the take profit's going to be pretty high at 80. So all we need to do is say, okay, we like those settings, and we can then run this in visual mode, and you will see the actual trading happening. And that's in fact what I'm going to do. I'm going to click on visual mode. I'm going to click over there, and I'm going to say, if we start trading, we want to go straight into visual mode. In fact, let's increase this to a point that's most probably okay, where we can maximize the actual screen. So I'm going to actually start the trading, and there are roughly 339 trades that will happen. I will start commenting on the first couple of trades, and then after that the trading will just happen, and you can look at that trading based on the rules that we've put into place. So my first step is to explain the rules 100%, the target, the stops, all that type of thing, and then we'll let it run for a while, and then after that you can just have a look at the trading as it continues. So let's do that. I'm going to start the trading, and okay, it started a bit fast and it hasn't entered a trade, which now will give me time to set this up a little bit better. So what I'm going to do is, firstly, it's get rid of the grid, makes it a little bit clearer, and then I'm going to add the RSI. That's the most critical item to add. So we go insert indicator RSI, and oh, it's already got the 5 level, and it has got the 95 level, so that's pretty good. We're going to use white lines for that, and I'll make them a little bit thicker. And then let's have a look at the RSI. It says a 3, so I'm going to change this to 3. We want to see a thick yellow RSI so we can see quite clearly what's going on, and there we are. So this is actually set up very nicely. So let's say okay, and there we are. So there is the RSI. And just to remind you, what would happen is when the RSI goes over that white line and comes back, that would be a sell signal, and a sell would be entered at that particular point. Now I see that happened in April, so that's why that sell didn't happen. So okay, so we're almost set up. Now just here we have a an EA information table. It will show some of the trades that take place. It will show the results of the tails. I think it shows the last three trades. It will show the position sizing and the results of those trades. So we'll have a look at that from time to time. And we're starting with a balance of 1,000 here. Equity is 1,000. The settings are shown: 3, overbought of 5, oversold of 5, overbought of 95. Risk is 15% of equity, stop loss of 30, and take profit of 80. And then what we're going to do is and then what I can do is condense this a little bit. Okay, condense that, push it back. We are on the euro yen, and we are on a 15-minute time frame. So there we are. Shall we start? Let's go. And we keep on going. All right, let's just stop there. So what happened here, as you can see, the indicator went over the oversold line, came back, and that is in fact a buy signal. And although it looks like this one should have been successful, I don't think I can increase the size. That red line is the target, the other red line is the stop. Although, look at that, it just missed the target, came back and hit the stop. So that was an unsuccessful. Now you will notice a lot of unsuccessful deals in this particular strategy because it makes its money from having big targets and small stops. So the stop outs are small, but the targets are big. So here we have one where it is a sell. There is the stop. See how close the stop is to where the entry was, and there's the target. So that it actually came down and hit the target. Very nice. So immediately and there is the signal why that sell happened. It went out, came back, and that's why the sell. Then it came back over here, and it was a buy. Now again, it went out, came back, entered a buy. There's the stop. There's the target for the buy, but it hit the stop over here. So that was a negative trade. And then the same thing happened here. It went out, came back, entered a buy, and was stopped out. So you'll see a lot of negative trades, but remember the negative trades are worth 30 pips and the positive trades are worth 80 pips. So let's keep on going. So that was quite quick. I better slow it down a little bit. And let's go. All right. No trades. Let's see what happened. Sort of touching those lines, but not generating trades. Right, I'm just going to stop it. Now, the other thing that we can now do is we can come to the table over here, and we can see what has happened. So the second trade was a profit of $255. The loss was a loss of 170 and 170. So there we are. So, and you can see the different lot sizings that were used for that particular one. And then we can have a look over here, and we're actually in drawdown here. Our balance is $700. So we've lost about $300 of our balance. But hopefully this will improve. Okay, there's a sell. Oh, also stopped out. There we are. That's the sell, stopped out. This you'll see a lot of stop outs with this system, as I said. Now, if you watch the video that I made yesterday, that video talks about creating settings for 100% success. 100% success. So in that video, I did the opposite of what I'm doing here. Here I'm showing you the a huge increase type of strategy, but in that one I show you 100% success. So it will only enter trades that will provide 100% success, and I show you how to do that. Okay, so let's have a look. We've had I think a positive trade there. There was a buy that went positive. Here's a buy that's also gone positive. So you can see the positive, just 2 trades have brought a lot of health to the account. There, unfortunately, we've got a negative sell. And again, why you can see why these were entered, where the RSI nipped out of that, out of those overbought and oversold environments. The other thing I must point out is when there's a transaction open and another signal comes about, it won't enter that signal until the transaction is resolved. And there's a sell signal that is has been resolved. So it only trades one trade at a time, which makes it ideal for the US market because there's no hedging, there's no FIFO or LIFO or any of those type of things. Therefore, this is very favorable for the US market. There's a buy that's just been entered into. Let's see, we can see the target. There's the target. And in fact, there's a sell signal, so not too good to get a sell signal during a buy trade, but let's see, it might make it. The account is now nicely positive, and let's see if it stays that way. Now this is the 15 minutes, so you'll get these sideways movements. That is most probably a period between the US close and the Asian market. So the market sleeps, literally sleeps, and goes sideways in those kind of periods. And then suddenly the market will open. There we are. There's a positive buy. Now the account is starting to grow quite nicely. There's another buy signal. There it is, that buy signal. And let's see if how that one goes. Boom, there we are. Now we've doubled the account at this stage. It didn't feel like it. When you see so many losses, it doesn't feel like you're trading well. But in fact, you must remember your losses are tiny and your profits are big. You must remember that. All right, so now we're in a sell, and there's the stop. The stop is pretty close, and there we are. That's a negative trade. Okay, and this is all that happens. Now for the next year, we only on May the 29th, so we've covered 1 month of trading. There was a buy that got stopped out. We've made 60% profit so far, so not too bad in spite of all of these hundreds of stop outs. There's a buy because it went over, and let's see if that goes positive. Okay, let's see, come on, a little bit more up. There we are, and now the account's again doubled itself. There's another buy that's gone positive. There's a sell that was entered, and let's see how that one does. All right, that was a negative sell. But the balance on the account and the balance on equity is almost 3 times our starting capital. So it's very deceptive, this kind of trading. There's a negative trade again, it's small. There's a negative buy, there's a negative buy again, and so on. So it feels as if the trading is building up a loss, but it isn't. We're still nicely positive. Our account is intact, and at the moment it is still at the double of the account stage. What have we got? Okay, there was a sell that went negative. Okay, and let's just keep on trading. That's a sell. Okay, so I think you get the message. Whenever a transaction is entered into, like that one, you've got to look down here and you'll see the reason for that entry. The RSI has gone out and come back. You'll see a few of them that have happened, but it's because there's an active trade that hasn't been resolved. So some of the transactions are ignored because of open trades that are in place already. And then what you need to do is look at this area over here to see the health of the account. The account is currently has an equity of $3,000. Remember, we started with $1,000. We're up to $3,000. It is now at the 12th of June, so it's been May. It's been 6 weeks of trading. We have tripled the account so far. And there's another positive trade that has brought the account really up to $5,000. So we have increased our account by 5 times already. Doesn't look like it. Lots of negative trade. There we go. There's another positive trade. That now the account has gone to $9,000. So this is very exciting trading. Also, bear in mind, we are sitting here and watching quite rapid trading. This happens in slow motion when you're trading live, because we have just covered 7 weeks or 8 weeks of trading in the last 5 minutes. So that's just bear that in mind. Okay, there's a sell trade that's just been activated, and it was a negative. But the equity is at 12,000, so we've moved $1,000 to 12,000 using this technique. Now, this is only one strategy. Yesterday I showed 3 other strategies. The one was a 100% success strategy where it only took successful trades, and that's obviously the one that a lot of people like. But because it's only taking successful trades, it takes so many fewer trades because of that. So and there's some really nice positive trades that's happened there. Positive sell, positive buy. There's a sell that gets knocked out. And then I also showed some maximum profit techniques where the success rate was over 50%, but because and the the average cash in was bigger than the average loss. That is a recipe for printing money, and that's another strategy that one can adopt. And then there was another one that was very almost similar to this, that produced good results, and you feel as if it's losing, but it isn't. So what you can do now, what we're going to do is just watch this trading. I will try and show the balance more easily. So there are a few things you can look at during the trading. Here is the equity that's involved. Here are the latest. You can see there are 3 losers in a row there, and that's why equity has gone down a bit. But so you can see the last 3 trades over here, and you can see the equity balance. So that's all I would look at while the trading's happening, is what is the equity balance and how are we doing in terms of profitable trades or not. If you look at the results here, there's one profitable trade that covered the losses quite nicely. Where are we now? We're in July, so we've covered May and June. Now, if you do have any questions, comments, remarks about this trading, please do them in the YouTube commentary facility, and I will do my best to answer. I do answer all the comments that are made, so I do my best to answer all the comments. Okay, and you can see a lot of failures, but the success of the actual success, the amount of the actual successful trades really outweighs the failures. And there's another nice big success. But you've got a good idea of why entries are entered into. The RSI sneaks out and comes back, sneaks out and comes back. There's a sneak out and came back. Unfortunately, that was a negative. And there's most probably a negative too. Let's have a look. Yeah, that looked like it was negative. There's a negative one. So as I said, the RSI is basically a sideways market. So when a trend like this happens, it doesn't deal with a trend very well, and you have a series of negative trades. Again, we're looking fine here. Overall, we're still nicely positive, and just got to wait for favorable market conditions, and the account will really repair itself quite nicely. The other thing is this is a very high risk strategy. When you are looking for $500,000, taking 1,000 to $500,000, you need to use aggressive high risk techniques, and this is a high risk technique. And what makes it high risk is the percentage that is being risked on every trade. We are risking 15% on every trade, and that is very high. Normally you would risk 1 or 2% on every trade. So that is why we are able to take $1,000 to $500,000. Okay, let's have a look what's happening now. We've had 3 profitable trades in a row. Very good. You can see, and the reason is you can see the market started going sideways. Another 4 profitable trades in a row. 5 profitable trades in a row. So you just need a run like that, and the account really starts. And there's another one, 6 profitable trades, and then there's a buy that went negative. And the reason is you can see a trend, a trend has developed. It doesn't trade well in trends. So we've had a few losses again in a row. And remember, those losses are small amounts, the profits are huge amounts. So we haven't added much profitability to the balance over the last 2 weeks or 3 weeks of trading. The balance is now at 13,000. Still a big increase in equity from 1,000 to 13,000, but you can see the volatility of the cash ins. You can go from very high balances to very low balances and so on, depending on the nature of the trading. Here's again a downward trend, and it doesn't do well in downward trends. There's a few nice positive trades. And in fact, equity has gone up quite nicely. It's now at $26,000. Or a few negative trades bumped it down there again. And we're now into August. So we've done May, June, July, August. So we've done 3 months. And let's have a look at... Okay, there we are. The balance is in fact climbing. It's now at 52,000. We've had a few nice positive trades in a row. Another positive trade, so it's just climbing quite nicely. And this is the nature of this particular EA. What we basically say, by having a small stop and a large target, what we're saying, we're prepared to lose small amounts when the market starts trending, but we want to make bigger amounts when the market is favorable. So at the moment, there's a sell that went nicely positive. There's a buy being opened, but which was stopped out, and yet the equity seems to be going up all the time. positive. Oh, we're now over $100,000. We've turned $1,000 into over $100,000 at this stage. Oh, there's another positive trade. There's a negative and a positive trade very quickly. Now, why that buy wasn't taken is because there was a sell that was active, so the buy wasn't taken there. Okay, there's a negative trade. These things happen. Okay, positive trade. And so on, and we'll keep on looking. Remember, there were 300 trades, so this is going to go on for another 9 months or 8.5 months. We're at the 19th of August. We're going to run to the 1st of May this year. Okay, still going extremely well. The account is now robust. It's got 159,000 is what it's grown to from $1,000. But it is a high risk technique. I must stress that what you would most probably do in real life, instead of risking 15%, maybe 2% would be a better risk. Okay, I'm going to go silent for a while. I'll come back in about 5 to 10 minutes and let's have a look at the status there. In the meantime, you can have a look at what is happening. Keep your eye on the equity, and I'm going to actually move this a little bit closer to the action so that you can watch the equity balance and you can watch the recent trades. And that is really all you need to watch. And you also need to watch the signals as they happen. Why was that a sell? Why was that a buy? And so on. And that was definitely a buy signal. Let's see what happens. And remember, when a transaction is open, signals are ignored. Only one transaction is open at a time. Makes this ideal for the US market. Okay, I'm going offline for a few minutes. Okay, I'm back again. It is now the sort of heading for the end of September. I see the equity balance has gone down since we last looked at it, but that again is the nature of the trading strategy. The other thing is that traders often stop trading a strategy when it goes through a losing phase, and that's most probably the worst thing they can do, because after a losing phase comes a winning phase. A lot of traders leave a strategy at the end of a losing stage, and a lot of traders join a strategy at the end of a winning stage. So they do it all wrong. And this exercise is a lesson in staying with the system. Don't leave after you've had 2 or 3 losses in a row and say this is rubbish. Stay with the system. This is a tested system. We know it works, but you've got to stay with it. If you leave after a couple of losses, you're not going to get the benefits that we're going to see later on. And in fact, the balances are going down quite a lot, but you need to stay with the system, because sooner or later a favorable market will present itself and you'll end up having 4 or 5 winners in a row that will increase the account balance tremendously. Already, since I've sat down and come back, the account has almost doubled. It is now at $173. $173,000. All right, so it's the start of October. Again, I'm going to go silent for a month or two. So for the month of October and for the month of November, I may not comment on the trading that happens there. I'll leave it to you to watch the equity balances and how their most recent sales or transactions have gone. Okay, I've sped up the trading a little bit. I noticed that I had it on a low gear and it's now going pretty fast. If you want to, if you see something that you need information on, just stop the video and rewind it a little bit to get back to the spot that you saw. But you can see the trading is continuing as discussed previously. The equities has gone low again. It's at 100,000, when, if you can call a low 100,000, and now we're moving through the months a lot faster. Okay, again, since I sat down, the equity was 100,000 when I sat down, and now it was over 200,000. So it's going to jump around a lot. The other thing is that as these balances increase, 15% of the balance becomes a huge amount. So you lose a lot on a losing amount, but you also gain a lot on a winning amount. And you must remember that ratio. We're losing small amounts on losers and we're making big amounts on winners. And the other thing to remember is this is back trading. So we've seen equity go from 200,000 to 100,000, and from 100,000 to 200,000 again. Now, imagine that in real trading, your nerves will just be shot after activities like that. So just bear in mind, what we're watching is probably not something that you would do in real trading. All we're showing here is that it is possible to be done, but psychologically, traders cannot deal with these huge swings in profitability and account balances. Now, a strategy that I use quite often is when I have doubled my money. Now, in this case, we're not talking about doubling the money because $1,000 has already grown to 180,000. But once I've doubled my money, I take out my original money and I then continue trading the normal strategy. I might even go slightly more conservative. In other words, I'll use smaller lot sizing. And every time I double the account, I take out that doubling so that I know that I have a risk-free account. After a while, you don't need to take all of it out. You can just take 50% out and let the account grow and grow. But it is then growing on a risk-free basis because you've extracted your gains in the process. So we're now into January. So it's January, February, March, April, May, April. Okay, so it's another 4 months to go. We are sitting at $200,000 on our equity, and things seem to be hotting up right now. Remember, it is likely that we will end with 500,000 of equity. We are now at 250,000. It's amazing how quickly things change using these simple trading rules. Okay, we've broken through the 300,000 barrier, and let's see how long we stay above 300,000. It's already dipped below then, but at least it shows we are moving in the right direction. Okay, we have hit the 400,000 barrier now, so things are really hotting up. It is only February, so March and April are going to be interesting months. We still have over 400,000 in equity, having started with $1,000. Just a reminder. All right, we have now hit the 500,000 barrier. It is May, so that is most probably where we're going to end off. It is currently 570,000 is the balance there on the equity. Now, the objective of all of this was to just show that a strategy can work and that you can take $1,000 to over $500,000. Let's have a look. We are almost at the end. We've got 2 more weeks to go, and the equity has actually dropped below 500. Let's see if we can get a recovery to keep us over the 500 barrier. Okay, so now we're down to 440,000. Isn't that amazing how the balances can jump up and down? And we still have April to go. Oh no, we still got 2 months to go, so that's fine. We can still catch that 500,000 level, but we've already reached there. So you start thinking, well, shouldn't I just stop and cash in all that money? Obviously, you need to decide that for yourself. But the objective of this one was to go for a whole year to show you a year's result. But by now, you should be able to see why transactions are entered into, why they are stopped out, why they are successful. It's very easy and quick to see that. And let's see, where are we now? Oh, we're over 500,000 again, and we are heading for 540,000. And I have increased the speed at which the trading is happening, because this is a pretty long session. It's almost 50 minutes so far, and we are looking at 530,000 in the kitty. April. Oh, first now we're going to stop pretty soon. Pretty soon we're going to stop, and oop, there we are. Stop. Okay, so let's have a look at the final results. Okay, so the final result is here. is that we have an account balance of 557,000. The equity balance is in fact bigger because you see that sell is actually positive, so the equity balance is 565, slightly different to what we had projected, and that's about all that we can see is because we've just followed this recipe of settings, and it has taken $1,000 to that level. So let's go and have a look at the actual report. And here's the report. It's telling us we've taken $1,000 to 569, basically 570. We've had a 339 trades. The drawdown now, the drawdown looks very big here, but remember we're trading with huge amounts at the end, so that drawdown is from the end, and it is a huge amount, and that's one of the dangers of these techniques. When you get aggressive, you'll have and this is an aggressive technique, you'll get large drawdowns. Look at this now. This is very important. The success rate was only 36%. 36% was the success rate. And why did we make a profit? Because our average gain was 190. Our average gain was 19,500, and the average loss was only 8,000. So that is where the money was made, because the gains were twice as big as the losses, the average losses. So there's a lesson in trading. Don't give up if you are losing a lot, as long as you are making more on your gains than on your losses. Now, I hope you've enjoyed this, seeing the technique being trading on a chart. We've condensed a year of trading into a 50-minute period, so it has gone a little bit faster. And as I say, if you want to see things in a little bit more detail, just stop your video and rewind it a little bit and pause it, and you can see a lot more detail. But it's a very simple system. The RSI goes overbought and then comes back, and that generates a sell signal, as you can see over there, and it will not enter another trade until that trade has been resolved. It will not, and there's the target for that one, so that's why that one is still active. It's a very simple system. The generation 2 essentially is the one where you can set your lot sizing or your position sizing to a percentage, and then generate these. Generation 1 will allow you to use fixed lots, and the results will be a lot smaller than the ones shown here. But there's much more risk in generation 2. As always, there will be links to anything mentioned in this video in the description of the video, as well as in the first commentary of the video. So from me, Alex Eploy, cheerio. Just a reminder to join our expert Forex community of over 30,000 Forex traders. It is free, so don't miss out on any new developments. A link is in the description of the video.